Interesting pattern showing up here. Bitcoin's dancing around that psychological $80,000 level, and it's getting really interesting from a technical standpoint. We've got this tug of war happening between ETF inflows and some serious profit-taking pressure. The Russell 2000 just broke out after a 64-month consolidation, which historically has triggered every major Bitcoin bull run. So that's definitely worth noting. Exchange reserves are absolutely plummeting. We're talking about nearly 100,000 Bitcoin exiting major exchanges since February, pushing reserves to a 2.5-year low. That's some serious supply squeeze happening right there. But here's where it gets tricky. We just saw ETF outflows of $277.5 million after a 5-day $1.7 billion inflow streak got broken. Weekly inflows still topped $1 billion though, so institutional spot buying is definitely still there. The key levels we're watching are pretty clear-cut. $80,000 is our critical support right now. If we hold that and reclaim $82,800 convincingly, we're looking at a potential entry around $83,000 with targets up at $92,000. That resistance cluster between $84,000 and $92,000 is where the real battle's going to happen. The 0.382 macro retracement sits around $85,288, and the 0.5 is near $93,099. On the flip side, if $78,000 fails to hold, we could be looking at a much deeper correction towards $60,000. The positioning is really mixed right now. Long-term holders are accumulating like crazy, with accumulator addresses up 60%. But we're seeing $479 million in realized losses daily, which tells us some folks are taking profits and not fully trusting this rally. Bitcoin's RSI is flashing overbought signals we haven't seen since early this cycle. With leveraged longs getting chopped up around $82,800 and hedging flows clustering near $82,000, we've got liquidity on both sides. A clean break above $88,000 would confirm cycle bottom territory, but rejection from that $85,200 to $93,000 zone could spell trouble. That's what the data is telling us.